Now, first things first, top line numbers, like I said, 110.1 billion naira for the 9 months, 48% year-on-year growth. Now, give us a story behind the numbers.
Thank you very much. For me, Diamond Bank is a very strong middle market bank, and the key driver for us is growth in our loan book. If you look at the growth in our risk assets, year on year, we've grown by over 38%, and that's despite the write-off we did briefly in the month of September that helped us manage our non-performing loan ratio down to 5.1%. So the performance you are seeing on the gross earnings is driven by the growth in our loan book, as well as growth in general volume of transactions that we have done over the quarter.
Now, Chiugo, before we go into those loan numbers, looking at your Q3 PAT was up 77%, BPT up 4%. Now, why is this? Why this discrepancy? Analysts speculate that it has to do with your tax charge.
Okay, yes. As far as tax liability provision is concerned, as a H1, we had actually over-provided. We had provided at a rate of 30%. But looking at the number as at end of September, we noticed that the actual tax rate should be about 21–22%, which is why it does appear as if there's a write back in tax as far as Q3 numbers in isolation is concerned. But overall, our tax liability provision is about 21–22% for the 9-month period ended 30 September.
Great. Now, can you shed some light on some of these, some concerns that analysts have mentioned? They said loan loss provisions up to 142% quarter on quarter, cost of risk up from 4% in half one to 6.3%. Can you give us what really happened here? Give us a picture of what really happened here.
Okay, thanks for the question. First and foremost, Diamond Bank accounting framework is principally Nigerian GAAP, and then we'll convert to IFRS. There are some technical processes or procedures you have to adopt as far as IFRS reporting is concerned. And the first item is interest in suspense, wherein under IFRS, you're not supposed to recognize interest in suspense at all, whereas in Nigerian GAAP, you have interest in suspense. So in converted to IFRS, you have to reverse the interest in suspense back to your interest income account and then increase whatever write-off figure that we have directly on your impairment charge account. That tend to create a significant growth in your cost of risk, whereas in actual sense, there's no additional provision that you have made on your NPLs. So it's just a matter of accounting treatment in converting the NGAP numbers to your IFRS that actually drove the perceived increase in the cost of risk to 6.3% that you have mentioned.
Well, thanks, Chiugo, for explaining that to us. But, I mean, with this better than expected results, are there going to be any revision to your forecast in terms of your ROE adjustments and, of course, your profit before tax revisions or forecasts?
Yes, we are looking at that. We are having our investor relations presentation next week. We're also looking at the forecast numbers for the year. Definitely, we will revise our forecast based on this wonderful performance from Diamond Bank, and that will be communicated to the investor community accordingly.
I don't know if you can give me some picture of your strategies going forward. We know the bank's focus this time was on high yield, low and mid segments of the market, and that was quite positive for your earnings generation. Are you going to focus on this going forward? We know Diamond Bank focuses on their deposit base. So is this going to be your focus going forward? Yes,
we will still continue that strategy. We will maintain a very low cost of funding on our balance sheet, and that is driven by a retail proposition which has continued to grow on an accelerated basis. On the other asset side, we've been able to deploy some of these low-cost deposits to high-end corporates as well as to retail assets, and that has helped to sustain the efficiency on the balance sheet as well as sustain the profitability we've recorded so far.